Welcome to Know What You Are Investing podcast, where we decode the world's top companies, what they do, how they grow, why it matters. In this episode, we unpack Palantir Technologies Q2 2025, a record-setting quarter that broke the billion-dollar revenue mark for the first time. We'll explore how Palantir's AI platform, AIP, is powering real-time value in healthcare, finance, and defense, and why it's reshaping how enterprise software is built. Let's dive in.
Welcome to the Deep Dive, the show where we cut through the noise to get you well informed on what truly matters. Today, we're taking a deep dive into Palantir Technologies Inc.'s Q2 2025 performance and its outlook for the future. Our mission is pretty straightforward. Unpack their latest financial results, understand the strategic drivers behind them, and, well, give you a clear shortcut to understanding this fascinating and sometimes complex company.
Yeah, exactly. We've been sifting through their recent earnings call transcript, the business updates, investor summaries, really trying to pull out the most important nuggets of knowledge for you. We'll go beyond just the numbers to explain what Palantir does, how it's growing at, frankly, an unprecedented pace, and why its unique approach matters so much in today's, rapidly evolving tech landscape. Get ready for some surprising facts and some really insightful analysis, I think.
Okay, let's dive right in then. Let's unpack these results. Palantir's Chief Revenue Officer, Ryan D. Taylor, he described Q2 2025 as a quarter of tremendous results, and he pointed directly to their U.S. business as the engine of this transformation. What immediately jumped out to you when you first saw the headlines from this quarter?
Well, what's truly remarkable here isn't just, the positive words, but the sheer scale of what they actually achieved. For the first time ever, Palantir didn't just kind of edge towards $1 billion in quarterly revenue. They smashed through it, hitting $1.004 billion.
Well, over $1 billion.
Yeah. And this wasn't some slow climb either. It contributed to their overall revenue growth accelerating to an impressive 48% year over year. I mean, for a company this size, that kind of acceleration is, it's pretty uncommon.
And there was one figure that really grabbed my attention, something CEO Alex Karp called, let me get this right, the single most impressive number any enterprise software company has ever seen. That was their Rule of 40 score, hitting 94% this quarter. That's just an incredible jump from 83% in Q1. Now, for our listeners who might know the term, but maybe not its full significance, why is a 94% Rule of 40 so extraordinary, especially for Palantir right now?
That's a really good question because it goes beyond just a simple definition. The Rule of 40, it's a well-known metric in the software world. It combines revenue growth rate with adjusted operating margin. So a 94% means Palantir's 48% revenue growth plus their 46% adjusted operating margin. It puts them in really rarefied air. I mean, for a company that's already pulling in over $1 billion a quarter, achieving this signals not just like exceptional operational efficiency, but a level of hyper-efficiency in how they deliver their product. It suggests their AI platform isn't just selling well, it's scaling with incredibly low extra costs. And that allows for massive reinvestment or, just straight profitability. That's a truly rare signal in enterprise software, hints at serious long-term leverage.
Right. And it seems that efficiency is translating directly into customer deals, too. They closed a record 157 deals worth $1 million or more, and get this, 66 of those were over $5 million, and 42 over $10 million. Plus, their top 20 customers now average $75 million a year in trailing 12-month revenue. That's up 30% from a year ago. So clearly, those existing relationships are getting much deeper.
Absolutely. And if we dive deeper into the hard numbers, that total revenue of $1.004 billion, that was a 48% year-over-year increase. And it even showed 14% sequential growth just from Q1. This isn't just strong, it's consistent acceleration, which is exactly what you want to see.
Right, yeah. If you look back at Q1 2025, their total revenue was $884 million with 39% year-over-year growth. So that jumped to 48% in Q2 while crossing the billion-dollar mark. It doesn't feel like just a one-off. It really indicates a clear step up in pace and momentum.
And that 94% Rule of 40 we were just talking about really captures this robust performance. It shows a consistent upward trend, right? From 83% in Q1, 81% in Q4 2024. It really speaks to both that top-line expansion and disciplined spending.
And the deal flow seems to confirm all this momentum. The number of deals over $1 million more than doubled year over year in U.S. commercial, and deals over $5 million increased fivefold. It suggests that once a customer starts using Palantir, they quickly see the value, and, well, they want more. They expand their commitment.
Exactly. And if you zoom out to the bigger picture, the total contract value, or TCV, booked, it reached a record $2.3 billion.
$2.3 billion.
Yeah, a massive 140% increase year over year. It blew past their previous high in Q4 2024 by almost $500 million. And crucially, their net dollar retention rate also climbed to 128%. That signals really healthy expansion from existing customers. This isn't just about landing new logos. It's a profound deepening of their current relationships, driven, as management kept saying, by this accelerating AI revolution.
Okay, speaking of that AI revolution, Ryan Taylor specifically called the U.S. market the engine of this transformation. What made the U.S. performance so dominant this quarter? Why is it so strong there?
The U.S. numbers are, well, it's kind of astounding, actually. U.S. revenue grew a remarkable 68% year over year and 17% just sequentially, reaching $733 million.
Wow.
So this means the U.S. now accounts for a whopping 71% of Palantir's entire business. It's pretty clear where their focus and their success is concentrated right now.
But the real standout within that is U.S. commercial revenue, right? That absolutely surged. 93% year-over-year growth, 20% sequentially, hitting $306 million. That segment alone is now past a $1 billion annual run rate. That's hypergrowth.
Yeah, hypergrowth is the word. And this incredible growth in the U.S. commercial sector, it's almost entirely credited to the accelerating demand for Palantir's artificial intelligence platform, or AIP. As Alex Karp put it, this is an American revolution. It's being led by ontology and chips.
Ontology and chips.
Right. So this isn't just about, selling software licenses. It's about a fundamental shift in how businesses operate in the U.S. With Palantir's foundational tech, their ontology right at the core.
And the other numbers back that up too. U.S. commercial remaining deal value, RDV, grew 145% year over year to $2.8 billion. And their U.S. commercial customer count increased 64% year over year to 485 customers. It's just rapid expansion on all fronts there.
Definitely. Now, turning to profitability, because growth is one thing, profit is another. Palantir also delivered really strong results here. Adjusted operating income reached $464 million. That represents a 46% margin. And this actually beat their prior guidance by nearly 300 basis points.
So beating their own profit forecast by an extra 3%, that's pretty good.
It is. And it's an improvement from Q1 2025, too. Back then, adjusted operating income was $391 million at a 44% margin. So what you're seeing is not just profitability, but real operating leverage kicking in at scale.
Right, which for a software company, that means as revenue grows, profits grow even faster, right? Because the cost to serve each new customer or unit of revenue is going down.
Exactly. And crucially, GAAP operating income for the quarter was $269.3 million. That's a 27% margin. And GAAP net income came in at $327 million, a 33% margin.
Okay, GAAP. Why is consistent GAAP profitability such a big deal for Palantir?
Well, unlike adjusted figures, which can sometimes exclude things like stock-based compensation, GAAP generally accepted accounting principles gives you a truer, more conservative picture of financial health. And for Palantir, which, historically faced some scrutiny about its path to actually making money, this consistent GAAP positive trend really signifies a mature, financially disciplined operation. It's a big milestone.
Got it. And what about cash flow? Cash is king after all.
They generated a huge amount. $569 million in adjusted free cash flow. That represents a 57% margin, just massive cash generation.
Wow, that's a lot of cash piling up.
Yeah. They ended Q2 with a really robust $6.0 billion in cash equivalents, and U.S. Treasury securities. And importantly, zero debt.
Zero debt.
Yeah. This financial strength just gives them immense flexibility. They also repurchased about 2.5 million shares as part of their buyback program, and they still have $899 million left on that authorization. So signaling confidence in their own stock price, too.
Okay, so we've talked about these really impressive numbers, record growth, profitability, cash flow, but what's really fueling this? What's the engine behind the engine? Management keeps pointing to their artificial intelligence platform, AIP. Can you break down what makes AIP so central to everything we're seeing?
Yeah, this is where Palantir really tries to differentiate itself.
Right.
Ryan Taylor, the CRO, he emphasized that while large language models, LLMs, they can seem impressive, they are, in his words, jagged intelligence, divorced from even basic understanding. And they can make catastrophic errors in complex, real-world situations. He then stated that Palantir's ontology is pure understanding, concretized in software, basically arguing that LLMs simply don't work in the real world without Palantir.
Okay, that's a pretty bold claim. LLMs simply don't work without Palantir. So what does he actually mean by ontology here, and why is it supposedly so crucial for making these powerful LLMs actually useful for a business?
Right. Think of Palantir's ontology as like a living, intelligent digital map of an organization's entire world. It charts how every piece of data, every process, every physical asset, every employee, how it all connects and interacts across the whole company.
Okay, so like a blueprint.
Kind of, but a dynamic one. It's not just a static database. It's a constantly updated blueprint that allows their AI to understand complex relationships, predict what might happen next, and operate within the very specific context of that business. This foundational understanding layer is what makes their AI platform AIP so uniquely powerful, they argue. And it's what prevents those catastrophic errors you might get from just plugging in a generic LLM. It's maybe the difference between having a really powerful calculator and having a true strategic advisor who understands your business.
Okay, that makes sense. So if I'm a customer, what does this architectural concept, as the CTO, Shyam Sankar, put it, actually mean for how I use Palantir? He said customers are literally building their software on Palantir's platform.
Exactly. It means AIP isn't just, another tool you buy. It's becoming the fundamental operating system for their entire enterprise. Sankar explained it provides highly opinionated building blocks that get you to value 10x faster.
10x fast.
Yeah. And this translates into really powerful, tangible impacts. We saw some amazing examples this quarter. Citibank reduced customer onboarding and security checks from 9 days down to seconds.
9 days to seconds.
Yeah, because AIP could synthesize all the different data streams instantly. Fannie Mae decreased mortgage fraud detection time from 2 months to seconds, saving millions by leveraging AIP's ability to spot tiny anomalies in huge data sets.
Incredible.
Nebraska Medicine saw a 2,100% increase in discharge lounge use. They said it was like adding another hospital unit. They even coined a phrase, a Palantir unit of time, meaning delivering value in under an hour.
A Palantir unit of time. I like that.
Right. And Lear Corporation, the auto supplier, signed a 5-year extension. They're using AIP for over 11,000 users across 175 different use cases. Their CEO specifically mentioned a first-mover advantage from using it. And one more. An American telecom company increased its contract value 10x and is projecting hundreds of millions in cost savings just by automating complex network stuff with AIP.
These examples really bring it to life. It's not just abstract tech. They also unveiled some new AIP tools at their recent DevCon 3, right? Things like AI FDE and AI Workbench. Designed to, amplify development work and enable autonomous execution, but still keep humans in the loop.
Exactly. Amplifying developers, allowing AI to act more autonomously, but with human oversight. And they also highlighted their Warp Speed initiative. That's their modern manufacturing operating system built on AIP. They shared an example of a customer reducing production line balancing time from a whole day down to just an hour.
Wow.
So this really ties into Palantir's narrative about powering the reindustrialization of America. They're even framing it as helping address big strategic issues like the gap in U.S. shipbuilding compared to China.
Okay, let's shift gears slightly to the government sector. That's always been a huge part of Palantir's business. How did that perform?
It remains a significant strength, absolutely. U.S. government revenue grew 53% year over year and 14% sequentially to $426 million. So very strong growth there, too.
Beyond just the impressive dollar amounts, what stood out to you in terms of the strategic importance of some of the major government wins they announced?
Well, the strategic importance is very, very clear. The U.S. Space Force Space Systems Command awarded them a $218 million delivery order for multi-domain warfighting. That shows their critical role in really advanced defense tech.
Space Force.
And the ceiling for their Maven Smart System contract, which supports NATO warfighters, was increased by $795 million. A NATO general, Marcus Lobenthal, explicitly said it enables the alliance to leverage complex data, accelerate decision-making, and adds a true operational value. So direct validation from a key user.
And then there was the really big one, that 10-year enterprise agreement with the U.S. Army, totaling up to $10 billion, consolidating 75 different contracts. That's not just a big number. It feels like a profound vote of confidence, right? A deep integration with one of their oldest, most important customers.
Absolutely. It's huge. Alex Karp, the CEO, continually reiterates the company's core mission to provide an unfair advantage to the noble warriors of the West. He also made an interesting point, saying they do exceptionally well when things are pen-tested.
Pen-tested, like stress tested.
Exactly. Implying that when government spending comes under scrutiny and pressure, Palantir's software effectiveness really shines through and gets validated. And they talked about how AI agents are transforming defense ops intelligence analysis, automating staff functions, and Palantir's right there in the middle of it.
Okay, let's pivot now to something maybe a bit more qualitative, but definitely important. Palantir's unique culture and, related to that, their sales approach. Alex Karp described Palantir as having a warrior culture that operates with no compromise in terms of what we believe and with almost no parasitic elements. How does this distinct culture actually translate into how they run the business day to day, especially how they sell?
Well, it connects directly to their sales model, which is particularly interesting and pretty unconventional for a software company of their scale. Alex Karp explained they've basically rejected the traditional playbook of hiring thousands of salespeople.
Right.
Instead, he stated their primary sales force now, and I think likely in the future, are going to be current customers telling other customers.
Word of mouth, essentially.
Yeah, but at a very high level. He says this creates enormous credibility right from the start. They don't have to spend months just building basic trust.
So they really don't have a traditional large sales team. I remember Daniel Ives from Woodbush Securities actually asked Alex Karp about this directly in the Q&A. He wondered if they'd ever change that strategy, given their massive success now. Does relying mainly on customer advocacy maybe limit their reach, especially for companies that don't already have a Palantir champion inside?
It's a really fair question, and Karp was pretty firm in his response. He confirmed their unique approach, stating they're very focused on the value creation and then collecting later. Ryan Taylor added that customer leadership is now proactively coming to them early on, wanting to implement enterprise-wide rollouts, basically pre-sold by seeing their peers succeed.
Interesting.
So it shifts the dynamic away from traditional selling towards demonstrating value and then scaling quickly. It seems they leverage word of mouth very effectively, maybe by being highly selective about those initial lighthouse accounts that then prove the value for others.
Okay. And what about talent? Mariana Perez-Mora from Bank of America asked how they attract and keep the right people in what's obviously a super competitive tech market.
Shyam Sankar, the CTO, highlighted something simple but powerful.
Yeah.
Giving people access to problems that matter.
There.
But what's really fascinating is how Alex Karp elaborated on that. He talked about Palantir offering unmatched time of joining to full agency.
Full agency, meaning?
Meaning new hires can be working on really impactful projects, things that make headlines within just 3 months of joining, not years, like at many big companies.
Wow, 3 months.
Yeah. He even called working at Palantir by far the best credential in tech, creating a new credential independent of class and background. It's all about empowering top talent with direct influence very quickly, rather than making them climb a slow corporate ladder.
And they seem to be extending that reach even further now. They're reaching out to blue-collar workers and even high school students through their American Tech Fellowship program. The framing was pretty provocative. Skip the debt, skip the indoctrination, get the Palantir degree.
Sounds like it's about empowering a whole different group of workers and expanding job access through AI-enhanced skills. Exactly. It ties into their broader narrative about technology empowering people, not just replacing them. Now, while the U.S. business is clearly firing on all cylinders, it is important to look at the international picture, too. International commercial revenue saw a slight decline, about 3% year over year, though it did grow 2% sequentially to $144 million.
Okay, that slight decline in international commercial?
Yeah.
That stands out amidst all the incredible U.S. growth. Is that a major red flag, or is it more about where they're choosing to focus?
I think it's more of a strategic nuance right now, because international government revenue, on the other hand, performed quite well. It grew 37% year over year and 11% sequentially to $127 million, mostly boosted by their ongoing work in the UK.
Right.
But Alex Karp has been pretty outspoken about the European market specifically, saying Europe doesn't get AI yet, and he hopes they will eventually.
So not writing it off, but not prioritizing it, maybe.
It implies a deliberate choice, yeah. Capitalize on targeted opportunities elsewhere like Asia and the Middle East, but keep the primary focus squarely on accelerating that explosive growth in the U.S. market for now. They seem to view Europe as needing more time to really adopt AI effectively at scale. Also worth noting, revenue from those strategic commercial contracts, which used to be a bigger thing for them, was tiny this quarter, just $5.1 million, and they expect it to decline further. So clearly shifting away from that model, too.
Okay, so amidst all this really positive news, record numbers, incredible growth, What risks or concerns did management actually acknowledge? Anything investors should keep an eye on?
Well, they did specifically mention a significant ramp in expenses in the third quarter. Apparently, it's due to the seasonality of when they bring on new hires.
Okay.
So that's something to watch in the next quarter's results, as it could potentially squeeze margins a bit.
Okay, higher expenses coming in Q3. And that international commercial revenue decline, while maybe strategic, is still something to note, right? It indicates some ongoing regional headwinds outside the super strong U.S. market.
Definitely. And this all feeds into a broader potential concern, valuation. Despite these, excellent results, Palantir stock has sometimes dipped right after earnings reports.
Yeah, the buy the rumor, sell the news phenomenon.
Exactly. It's often attributed to really high investor expectations already being baked in and a stretched valuation. I saw one analysis after Q1 noting the company was trading at something like 220 times expected earnings for the year.
Wow, 220x. That's rich.
Very. So the market is clearly pricing in a lot of future growth. Management, though, seems pretty unfazed by short-term stock moves. They remain committed to continued investment in elite technical talent and achieving sustained GAAP profitability as their long-term path.
Okay, let's quickly touch on some of the analyst Q&A. It often gives good insights. A shareholder named Christina asked how Palantir is making AI useful for, frontline workers, not just the PhD data scientists.
Yeah, Shyam Sankar's answer here was really compelling. He said, flat out, AI is giving the American worker superpowers.
Superpowers.
And he gave concrete examples. ICU nurses getting more time with patients because AI handles paperwork. Factory workers in the submarine industrial base getting back 3 days of quoting time per project. Even Panasonic energy workers, whose backgrounds were apparently in casinos, now developing AI tools to train other workers on handling complex Japanese manufacturing tech. He really framed it as AI expanding jobs and empowering people with new skills, directly countering the narrative that AI just replaces workers.
That's powerful stuff. And Daniel Ives from Wedbush, we mentioned him earlier, he pressed Alex Karp again on that unique sales strategy, asking if they'd ever adopt a more traditional direct sales force, given how big they're getting. It really gets to the heart of their model.
And Karp just doubled down on their unconventional approach. He reiterated, primary sales force now, and I think likely in the future, are going to be current customers telling other customers. He stressed again that this gives them enormous credibility right away, letting them have higher-level conversations from day one. Customers end up buying more faster. He also said pretty bluntly that they do not have time or interest in spending all the time we did in the past, starting from complete ignorance with new clients. It speaks to a very efficient, targeted sales cycle focused on proven value.
Right. Focus on where the value is clear. And finally, Mariana Perez-Mora from BofA asked about the White House's AI action plan and, again, about retaining top talent.
Shyam Sankar saw the White House plan as incredibly exciting. He felt it was removing all the brakes and focusing on actual implementation, which, aligns perfectly with Palantir's practical, results-oriented approach. On talent, he just reiterated, giving people access to problems that matter. That's key to their retention. And Karp jumped in again, emphasizing that Palantir offers that unique environment where top talent gets full agency almost immediately, working on world-changing projects within months, calling it by far the best credential in tech, one that's independent of class and background.
Okay. So, pulling it all together, what does this deep dive into Palantir's Q2 2025 really reveal? It certainly seems like Alex Karp wasn't exaggerating when he called it a once-in-a-generation, truly anomalous quarter.
Yeah, anomalous in a good way. We've seen absolutely record-breaking financial performance, especially that stunning 93% year-over-year growth in the U.S. commercial market. Their artificial intelligence platform, AIP, is clearly proving to be the core value driver, enabling really tangible business transformations for customers. And it's all supported by that unique sales model based on customer advocacy. Plus, their strategic importance in government and defense just keeps growing with these massive new contracts.
And Palantir's own confident outlook, raising their guidance significantly across the board. Full-year revenue targets now between $4.142 billion and $4.150 billion. That clearly suggests they expect this powerful momentum to continue. So what should you, our listener, really take away from this quarter's groundbreaking results?
Well, I think it highlights Palantir's truly differentiated approach. It's built around that core concept of ontology and driven by that intense warrior culture. Their aim is to deliver a genuine, unfair advantage to their clients, transforming operations with AI from the ground up, not just sprinkling it on top. The focus on practical, high-impact AI solutions, even empowering frontline workers without traditional tech backgrounds. That highlights a really unique strategy for both value creation and talent development. And given their bullish stance on America's reindustrialization and their, let's say, distinct perspective on global AI adoption, maybe a provocative thought to leave you with is this. How will Palantir's uncompromising values and unique operational model continue to shape not just its own financial future, but maybe the broader landscape of AI adoption and even national strategy in the years ahead?
A fascinating question to ponder. That's all the time we have for this deep dive. Thank you so much for joining us.
Yes, thank you. We hope this deep dive has helped you understand Palantir's Q2 2025 performance and its outlook from every angle.
We hope you now know what you are investing.
Know what you are investing, what they do, how they grow, and why it matters.
Thanks for listening to Know What You Are Investing podcast, where we decode the world's top companies, what they do, how they grow, why it matters. Today's episode gave you a front row view into Palantir's Q2 2025, from record-breaking revenue to the AI platform that's transforming industries and how its warrior culture is driving success. Stay tuned for more deep dives into the companies shaping the AI revolution and beyond.